Craig, this is a market overall, if we take a look at it, that was maybe not expected to go back to all-time highs. I mean, we're not there yet for the S&P, but we're kind of there overall. Is this a surprising move given the moves that we've seen over the course of the last couple of months?
Dom, I think this is a market that, again, the move up off of these April lows has been a little bit surprising, I think, for investors. But when you step back and look at the big picture of this, we're sort of on a road to nowhere. Like, this is a market that's probably going to end up consolidating sideways. Again, markets can go up, down, or a third direction is just sideways. Consolidate in terms of time, consolidate in terms of price. And that's kind of what we think is certainly happening. And again, the markets have been pretty quiet over the last couple of days with the economic data points that have been coming out between the PPI and now the CPI today.
The record highs that we've seen in the NASDAQ imply that there is still a tech tilt towards the broader market overall. Do we feel as though the muscle memory of the course over the course of the last 10, 15, even more years is that on every single dip, people just end up buying technology?
Dom, I think when you put it all together, it's like the U.S. is one of the best countries in terms of innovation. China does a great job replicating. Europe does a great job regulating. And so when you think about the U.S. at this point in time, yeah, people are going to be buying these technology stocks on the dip. We still remain overweight the technology sector here at Piper Sandler from a technical perspective. And again, I think tech is probably the right place to ultimately be, but it doesn't have to be just the big mega cap names, Dom. I think we can start to see this broaden out to a degree. But that also brings up another great point that you're making here in terms of just buying the dip in terms of tech. And you look at what has led coming off of these April lows, it really hasn't been tech. It's really been other parts of the market. It's been things like utilities. It's been staples. It's been other parts of the market that are definitely more defensive in nature than offensive in nature. And that's why, again, I'm not sure that we're going to break out the new highs here. I think we're going to kind of pull back, get close to those highs, and then fall back into this sort of sideways consolidation range for a while.
There's been a lot of focus by traders out there on this idea of the broadening out, as you point out, of the market overall. People have been looking at the S&P 500 on an equal weight basis versus the market cap weighted index. What does the move between those two respective indices tell you about whether or not this bull market still has legs?
Well, we are definitely seeing some broadening out in participation of this market. But if we're going to get a new leg higher, I would absolutely think it would have to be driven by technology and consumer. And right now, that's not the case. I'm starting to see more things in the defensive parts of the market, Dom, that are driving it higher. So the broadening out is good, but we do need to see tech. We do need to see consumers pick up in here to further broaden out and sort of push us to the next level. And, Dom, you also mentioned 10-year bond yields. It's going to be very important for the financial sector to at least participate in the advance higher here. We are seeing some green shoots in financials that is indeed the case. We're overweight the sector, and definitely would look at stocks like TradeWeb, JP Morgan, some of those other names as sort of beneficiaries of this broadening out. But again, tech is going to be important. Just doesn't have to be the mega cap names to really drive this. And the 10-year bond yield, it's still trending higher. And the correlation between the S&P 500 and 10-year bond yields is inversely correlated at this point in time. So we do need to see, you need to see 10-year bond yields keep working their way lower. But from a technical perspective, you're still in an uptrend, pretty well-defined uptrend.